What's going on, guys? Time for another YouTube recap. So, if you missed the last video, I'll put the link in the description, but I need to play a little snippet here from our prediction video yesterday. Both of those levels we're going to be hoping to get the end of the week. Now, we could mess around here a little bit, and I'll tell you the places that you should watch out for. And we have a 50 tag on this guy, but minute 14:55 Central, 14:50. We have no GP tag right here as well. I think there might even be one right here. Yep, another one. So the lowest point of price action magnet, if we stay under the golden pocket that we just from, worst case scenario, we see 222-134. All right, worst case scenario is we come down to 222-134 before going back to the upside. The entirety of that entire trade here that I was playing out, all focused on over under the golden pocket, as you see in my last video, right? So we put a couple predictions out for that, and I do want to just take a second here to show you where the golden pocket lied. This is where we said we would come down to 222-134. Bottom of the market today, 222-134 is right here. That's what the channel was. So we had an algorithm displacement down here that needed to be filled before we went to the upside. So again, giving you guys a opportune move. And we charted off the channel right here as well. That's that 50 big channel up here. And we said, as long as we're trending under or over 22220, we were going long to 22304.85. Well, here's your final trend. It was a megaphone pattern, which means you are getting high, higher, high, higher, high, low, lower, low. So you're getting this megaphone, very bullish pattern, and it held and trended right here above and pushed up to the 23 or 22304. Very close. We still have to maintain bullishness now because this algorithm displacement is not filled. But this very interesting algo displacement that came up with the no tag fibs had to fill first. So we walked her back down. And if you watch the video from yesterday, I tell you guys that we're going to come up here and most likely fill a couple of the gaps as well that we have up here at 22,304.85. So on and so forth. So we did pick a really nice bottom watch area there for this video. Still looking for upside. And the other worst case scenario would be this golden pocket right here. And that comes in 221, so we'll call 180 just above 180. So this minute candle right here and this minute candle, they both are 5-minute candle, both have no GP tags. So we're going to be paying attention to that 1450, 1320. That's how many feet is in a quarter mile for a drag race. Love it. And then we're going to look for the long. So anything over the golden pocket. All right, you get the point. So we're going to continue on up. And we have some other targets here. We also posted on our friendly X here. And we said huge over under long support over the GP of yesterday's high low. What does that mean? Well, this is yesterday's high low on the QQQ. You take 540 as a top, 536.04 as a bottom, you draw a Fibonacci, we get our golden pocket. And as the thing suggests here, that we get a golden pocket tag here on the QQQ, find support, which is long support above golden pocket, yesterday's high low, yesterday's high, yesterday's low, golden pocket, and above is long to 540.73. Notice I drew a giant green candle. Let's go see how that played out. So we're going to go to the QQQ. Here's the golden pocket. Long above, your target long for the day. Wow. Tough stuff, right? 540.73, top of the market. Okay, so on the next call, again, as I posted in pre-market, long support over, I gave you guys the entry. So your long is 538.02 right here. As you can see, we're coming out of pre-market into that golden pocket support. That is your best case entry and your best case exit at 540.73 per the FOMC. Now, even during the FOMC, we were talking in our chat here about the shorts. So here's that 540.73 QQQ top I called. Today is about 144. And I said, we're shying it, right? We got really close to 540.73, but we never hit it, right? So I was going through speaking about price levels and what we're going to do for the short, right? So we're planning a short on obviously the long exit, right? So we went over a whole bunch of key details here. I said 22,300 is key. We need to pop into that and we'll get a 40 to 50 point short, okay? Here's the tag, me posting in our chat, minute for minute, 2 p.m. hits. We hit 540.73, which is the market top I called this morning in pre-market. Great slip, awesome. So we hit it. We talk about M&M, weakness, mom spaghetti. I tell everybody we wait for this 1 minute lower low break and we will fly 40, 50 points to the downside. We put it on. There's the tippity top. We call where it is on ES as well. I told you guys you had about 11 to 12 points here, 8, 9, down to your gap here on SPY. So we went over SPY in there. We posted our P&Ls for that short day, a little $3,000 day, not too bad. We did get our payouts today on Top Step, so we are building back up at these accounts, hoping to move to those live accounts. So as we're building up these 4 here, we are continuing on the way up. Now, I did call a couple other things and got out of chat here, and Minty shirt call, which I can't type at all, which my chat knows. Minty short call for the top, though. Then we're talking about news. So let's get into it. So we predicted the long biased anything over here. We had a bunch of algo displacements here. We had a gap here, even a 5-minute gap that we had seen intraday. So when you see a 5-minute gap, for scalpers like me, it's an instant, it's a guaranteed fill. So let's go to the 5-minute chart, show you where that is right here. The red candle, central time, 9:50 to red candle, 9:55, obviously central time. It gapped right at the 50 fib. I told you guys to watch the most important long level. The algos knew exactly what to do at that level. Notice they gapped at that level, back tested the 5-minute at that level. It's also pre-market low, maybe or high, no, low. It's also the pre-market low. So here's that pre-market low, came back down, got the GP, higher low, and away she went. So this is where we told you to long. This is where we told you to exit, right on the green level of 540.73. And if you watch all my videos day by day, you'll know where I got this target because we talked about it 3 separate times already. So I'm not going to go into that again because we have called that. Now, where are we going from here? Well, Brandon says we have gaps above still. So let's go to the NQ chart for the rest of the prediction. I'm not going to get into too much here. As I called the stuff on X, we called it on Twitter beforehand. My chat knew it was up. So we don't got to go into too much, but after we called the bottom watch here for the support algo displacement, we also called this 1-minute algo being filled and a higher one right here, 385 for the end of the week. Well, tomorrow's Thursday, and now again, we're going to utilize that same strategy. I'm going to move in and say, well, we got double dojis. And if you watched yesterday's video, I went like this and I grabbed the body like this and I said over, under, and I'm just going to do the same thing, but all I'm going to do is include today's. Simple as that. I'm going to take today's doji, yesterday's doji, and we're going to mark off that channel. Again, the same way I do every day on live stream and after. So we're going to watch for direction from this double doji daily area of a bunch of 2s and 25. So we're going to see yesterday's close, half candle retrace, or anything above, go long 22304.85, and then by the end of the week, we were hoping for 385 and 4 cents. Same prediction as yesterday, but I did want to mark off some key points on why, if you last watched yesterday's video, I'll put the link in the description for the prior video, why we said the short was going to come down to here before the long. That's why we got that support. And then, of course, we said long over 2220. It's just yesterday's close, any trend, right? So we missed the final target by a smidge here of that gap. So we do have a 1-minute gap still open right here. So the double doji body is still going to articulate a great long to here. It's still going to be over under. So the prediction is going to stay in the same. This zone long to the gap as we drew yesterday as well. This zone long to the secondary gap. This is still long biased if we are above the double doji body on the daily we just discussed. If not, you're going to look for the downside. Right? Simple as that. It's over, under. It's all about the trend from there. So we pick a premium level. We utilize our intraday indicators to follow suit for direction. Now, what we have here is a short back down to also no GP tags. Now, if you zoom out a little bit here, and I'll clean this up just a bit, the last but not least, we'll go over the daily no tag GP. Now, in the last video, we drew this high-low here on a specific date for a specific reason. And we said if it stays above 221243, it's going up to the 1618. Same thing that happened to Qs. That's how I picked the top today and the middle and the bottom. So watching the Fibonacci ranges, okay? So this was the defensive support at the 100 fib. That's the high of the candle. That's the low of the candle. Anything that holds above the high of the candle, obvious support, 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 last 2 days, will continue to truck higher. Once we get underneath this, right? Let's say we break all of this fantastic support from the last 2 days and that little dip, and we start heading down. We will then target the golden pocket that needs an algorithm tag down here in the 21.8 range. But that is only and only when we get under 22124.30, the 100 fib. So we got to break a lot of big supports before we articulate a trade that would crack through the 100 fib and chase down the golden pocket no tag that we have been watching. Now, the cool thing about this is we're going to get a really good short up here near 22,400. This whole area is full of first tag algo resistance plays. That could be the shock factor into this end week of this week holiday and into next week where we stay under 22,400 and end up down at 21,940s, over 200 plus points to the downside coming up potentially as we see it. Now, Powell was a little dovish today, so we need a standard pullback for February sentiment. We'll have to see if we get it, but that's the full prediction. It's going to be the same old, same old. If you want to see me do this stuff live, predict this stuff live, and go over everything I just did today while talking to my live stream chat as we trade it, right? It's not an alert service, though. I'm just telling you what I'm doing. We step by step walk you through minute by minute, picture by picture, verbally and on the screen. I'm not going to give you a perfect entry. I'm not going to hold your hand. I'm not going to say, okay, it's time to click the button, guys. You guys paid me $100 this month. I got to make you 50 grand this month. Loser mentality. Come here to learn. Come here to win. Okay. Come here to win for yourself is the biggest takeaway, because learning this stuff is key. Trade alert services are fake. Now, let's get into the last little piece that I do want to bring up here. Oh, that's the top step. Oh, there she is, the volatility index. Okay, so I do want to add this in before I close out the video here. The volatility index was also a really big precursor on how we figured out the long was coming. So I use a deviation of 5 day away, and I only use this on the 5 day, 5 minute on the volatility index. The deviation are these lines that you see right here. We call it standard deviation. This is a little bit of a custom code, but if you want any of our custom codes, you sign up at Boiler Room Trading, you shoot me a message, everything's free. I don't charge extra. I don't nickel and dime people for courses and indicators and all that nonsense. I make way more than enough money trading. I am not nickel and diming you guys. I do it for real. So none of this nonsense. As we came into the deviations, though, we don't see the volatility index move outside range very far of one range. So if white is our center, +1 is obviously above it, -1 is below it in the yellow, +2 is in the red above it, -2, right? You get the point. So standard deviation, it does not like to move outside the one range. So if the volatility index is pushing into the +1 in the yellow, there's a very high % chance that it will fail. Pushed into the yellow, high chance that it will fail, right? Here's a -2. Very rare when we get outside the one into some others, right? Where we see sometimes even +3, right? And once that deviation trend hits, notice the knee-jerk reaction it had down when it hit that deviation. So part of that day trade today and how we knew it was going to go long was because once the VIX got under the deviation +1, started trending, started making the gaps, we had a lot of gaps to the downside we needed VIX to fill, and we noted this in our pre-market breakdown on how to trade today, where we had a double session gap. We had one gap right here that walked itself up, closed these two gaps. All those little lines are 5 minute gaps that you see. It's an indicator that we give away for free here. So that gap right there was the indicator. And I said, once that loses that deviation, I said, we still have this fancy little gap down here to fill. Look to your right. Boom. Okay. So simple as that. Now, if you want to see me do this live, link is in the description. If you want to just tune into the free YouTubes, also cool. You guys want to ask questions as much as you can, I'll make a whole video on it. I have nothing else to do as a retired trader and retired business guy. So I'm here to help. Ask away. So we'll catch you guys on the next YouTube video. Trade safe. Stay curious.